Hey, hello, welcome back to the PJTrades review series. I hope you guys are enjoying this series as much as I am producing it for you guys. Today we've got a really clean inverted fair value gap / continuation model to talk about. But first, I just wanted to really just give you guys some trading advice, man, from someone that's doing it for 10 years. This channel is changing people's lives. I get DMs all the time, Instagram, YouTube, Discord, wherever, of the value that you guys are getting out of this series. And that's the reason I started it in the first place, because most people will show you this flash lifestyle, this, that, and the third. They won't show how they're actually getting it. This series is really taking off. And I just want to say, I'm thankful to have this channel. I'm thankful to be doing what I'm doing. Really just, it's touching to get the messages and seeing how much money some people are making, and some people being on the streets with their kids and getting an apartment from the money that they're making from this free YouTube series is, man, just like, wow. And I just want to take a moment to say thank you guys for really trusting me with this trading education. I take it very serious in an industry that I think is diluted with fraud. I appreciate you guys putting your trust in me with your trading education. Today's trade review is just a clean continuation model, which I literally teach here on the channel for free. So if you guys spotted it today, congratulations, salute to you. If not, that's why we did this trade review in the first place. So you guys can go back to the tape and review what you might have missed in the market today. So if you're following along today, guys, it's going to be Monday, November 3rd. We are into November already. And yeah, the market's been moving pretty good, man. We had an excellent October, and we've already started off November really hot with this clean continuation model. So let's talk about it. Let's talk about it, because today there was some classic AMD. If you guys are not familiar with the classic AMD, I'm going to break it down for you guys here like you're a 2-year-old. You can understand AMD, right? And how to spot it. So market accumulates here in this zone. That is going to be our accumulation phase. The market is accumulating here. It's not really breaking out one way or the other. It's stuck in a tight consolidation of 56 points, right? So it's accumulating orders, right? Now, in AMD, okay, you have accumulation, then you have a manipulation, okay, which is this right here. And then the last part is going to be a distribution, right? We want to see distribution, which is the real move. Like, just, we want to see the real move. The market's going to fake people out, reverse, draw the other way towards resting liquidity. That's what the market does, man. And if you could just spot that right there, you will save a lot of money, okay? Not being caught in the manipulation leg, and then make a lot of money, right? Taking the distribution leg, which is right here. So today's setup is a pretty clear AMD model. And it just took a little bit of patience, because today was a Monday with a red folder on the docket, which is also super rare. So Monday shows up, there's a red folder at 10 a.m. And now I'm waiting for that 10 a.m. news release. So here's 9:25, okay? And now we are right about 9:50, and the market's already starting to trickle lower right before the news event at 10 a.m. So accumulation, manipulation, starting to distribute. Now, here's where you guys gotta like just chill, man. A lot of you guys are chasing. You're chasing right here, man. This is your chase. You think you missed everything. You think you missed the move. What you're really not getting is that the move has just started. Look at all the liquidity resting below us here. I have London low way the heck down here still, and New Week opening gap full fill way down here. Okay, on top of that, I'm using this 1 hour unmitigated bullish FVG as a draw. So the move's just starting, dude. So chill out, right? Because a lot of people they're FOMO'd in here. If you know AMD and you're intermediate, accumulate, manipulate, distribute, this is not the full distribution yet, right? It's 128 points, but the market can go a lot farther than that, right? So this is where a lot of you guys got to practice the discipline part of this and the patience side of it, because you're going to get an opportunity here. That's the thing that most rookie traders don't understand. There's going to be another opportunity here. Just let the market play out first. So we're looking for a trade setup, and I guess some people will probably be like, hey, why are you not like taking this inverse right here? Like, why are you not taking that trade? To be honest with you, I did call this trade out in my Discord today. I said, hey, this is probably a good opportunity right here, but I have a rule. I don't trade the first 15 minutes of the open, okay? More often than not, that first 15 minutes is gonna dice you long term. So I just let it go. Now, yeah, there was a clean inverse right here, and you could have taken a trade just like this, right? You could have taken this trade and actually almost been, you would have been done right here, really. Right, that would have been 70 points off the rip, and you would have been done at 9:55. Your day's done, which is fantastic. But I have a rule, and I don't trade before 9:45. I also don't trade before a 10 a.m. red folder. Let's not forget, we've got a 10 a.m. red folder that's upcoming. So, market's setting up for the news here, and here we go. Here comes news. News has been released right here. Okay, let me bring a bar back here because I believe the trading opportunity already is starting to show up. Yeah, here we go. So I'm on the 1 minute now if you're following along. The market's obviously displacing lower here, right? We're making new lower lows. We're failing to make any new higher highs here. And we've got this really nice 1 minute gap that's holding price down pretty aggressively. It's now the 1, 2, 3, 4, 5, 6 test of that 1 minute gap. And price is holding itself down from there. If we also look on the 5 minute time frame, it's a 5 minute bearish gap as well. So this area is definitely key for price right here. And it's also 8:30 opening price. I love when like a lot of confluences come together at once. It's 5 minute bearish gap, 1 minute bearish gap, 8:30 opening price, which is now starting to hold price down. So we see this reaction here, right? And here's what I'm talking about, the patience part, right? Look at this. Look what happens. The market pops back up. 57 points in 10 minutes. Rookie traders are trying to short this down here, right? And they're getting torched. They're getting torched, right? We wait for the true pullback into this gap one more time, and then the market sets up a beautiful continuation. So from here, chat, what would you be looking for to get involved in this trade? Some sort of inversion out of this 5 minute / 1 minute gap, right? You'd be looking for some sort of inversion. Boom, there's your inversion right here. That's your inverse fair value gap, right? Look how this sets up. Puts in your inverse. The first target is gonna be the external low, right? That's basically gonna be like, I'm happy with this trade, and then I wanna be out here because this is gonna be a bounce area that the market likely could come into, V-shape, and run the other way, because we are counter trend trade trading here. We are counter trend trade trading. That's a mouthful. The market's overall bullish, but I'm looking for shorts today. So we take the inverse trade right here. We actually get a little bit of a front run going because I'm just very confident in this trade. We run the stop right above that wick, and then we're targeting this for about 40. I think I got 45 right here out of it, for a solid 1 to 175 trade, which is, you know, I'm happy with. Couple things that happen inside of the trade that I want you guys to take note of. You're gonna notice this large bullish gap here, which to me is always a little tricky. So I'm overall loving the reaction out of this gap here. I'm loving this reaction. So I'm in this short, but I know that if I get down into here, there might be a little bit of a pullback. So we end up running stops to break even right here. Once we close consequent encroachment of that 1 minute gap, I'm fine with going break even here. I really don't want to see a pop from there. And it was the perfect area to break even. And then we get full delivery from there. And then this actually ends up running even lower. I believe it tags the London low. Yeah, I think it just tags London low. Yeah, it tags London low perfectly and then reverses from there. Some members ended up catching all the way down to London. I was completely fine with taking my, my piece of the pie right here at 45 points. So that was it, man. Tactical trading, just looking for clean inverse continuation gaps, to draw into lower liquidity, man, lower resting liquidity. A lot of times here's the key here today. If you're looking for key points, the market loves to fill first presented higher time frame PD rate gaps, man. This is right here, a breakout gap. This is the first presented on this leg up, right? So if we look at this leg up, the market loves to come down into this gap here, at least at minimum. So for me, I am loving my odds of taking this trade from here, right, to here to fill that first presented, because they're so accurate. Look at it for yourself over the long term. Not even 1 hour gaps. Look at 15-minute gaps, look at 5-minute, look at 1 minute first presented. They always hold so much weight in this market. So taking a trade into that gap there, I am just completely fine with doing. We end up getting the full delivery right there down into that 1 hour gap. And then you get a little bounce from there. So I'm happy to be out of the market there. So that's today's trade. It netted me $3,200 on my funded Next accounts. And if you guys are looking to, secure any prop firm deals this November, always use code PJ. You will get the max amount of money off on any of the prop firms that we have listed here at the top of the video. So that's today's trade review. The continuation model prints again, and we are done and dusted for the day. Thank you guys so much for tuning into the series. Have a blessed rest of your week. I'll see you in the next one.